back on the Morning Brew with our friend Greg Frost this morning, and this is great. There's some new numbers you have in the mortgage world that I think are really fascinating. So for years and years and years, there's 1.25 million homes sold. These numbers you were telling me about are kind of staggering.
New homes,
but
yes. Nationwide.
Nationwide every year.
New homes.
1.25 million homes were sold.
That was the average.
That's a lot of homes.
There was a lot of houses, and that was the average, and that was kind of the norm, and it was the norm leading up to the 2008 meltdown.
And so that was the inflated kind of...
Exactly. I'm of the opinion that that was a high number, and it was fueled by cheap credit, easy credit.
Right.
Every American a homeowner, you know, and it was excessive. But everything's been pegged against that number for years now. And the new number is 546,000.
So it's less than half. It's like a third of the new average is the third of what the old average was.
A little less than half.
Yeah,
a little less than half.
That's amazing.
Help you with your math there.
Yeah, my math. There's a reason I do this and not math.
I'm supposed to know the numbers.
But so what does that mean? I mean, is that one of those things that we should be worried about, or is 546,000 new homes sold a year like a good number that we should kind of be comfortable with?
It's not a good number. It's not a good number because of the economy isn't growing at the rate it needs to grow, and housing leads the economy. So the housing numbers need to be higher. And the reason that there aren't better numbers in new construction is because very few of the local home builders who were actively building houses prior to 2008 are still in business.
Right, so many of them went under after that. Yeah.
And so the only builders that have the funds and the financial wherewithal to build ahead of sales, in other words, to have houses there ready to buy, ready to move into, are the larger builders. We've got 2 or 3 of them in town. So your inventory of new homes is low. Right. Well, whenever the inventories are low, people out looking for houses tend not to buy in the numbers they would buy if there was lots of inventory out there. You know, just like a shoe store. Right. You got lots of shoes in the shoe store, people buy lots of shoes. Got lots of houses in the ground ready to go, people buy lots of houses. Yeah.
And well, the competition makes it a little bit easier for people to get into houses and everything else, right?
It stimulates everything.
Right. Yeah. So what do we do about it? I mean, is it something that we as a community just have to say, well, this is it and live with it, or can we actually do something bigger about it?
We don't have as many local community banks as we used to who were providing construction credit to local builders. And until that situation turns around, until there's a loosening of construction and land acquisition and development financing, which is very hard to come by for the local builder, until that turns around, you're going to see this situation.
We've got some bankers coming on in a bit. We can talk to them about
Great.
that. That'd be great, yeah. And then there's an interesting word here on the notes, the HELOC Relock, which I love.
I thought you'd like that.
I love what that, I don't know what that means, but I love how it sounds.
Home equity line of credit.
Okay.
Home equity line of credit refers to a mortgage that had a period of time at the front of the mortgage where the interest rate was fixed, it was interest-only payments, and there's a whole bunch of them out there that were fixed for 10 years and ready to recast for the remaining 20 years of the mortgage. And the monthly payments are very possibly going to double or triple on the people that have these mortgages. It's another mortgage crisis that's looming, and we'll talk more about it as it starts to develop here. Yeah. But this year and next year are the years that those first 10, 20 loans, 10-year interest only, 20-year fully amortized mortgages, they're coming due to be recast now.
And so people have to refinance?
No, actually the bank that they're with will just reset the monthly payment based on current interest rates.
So someone's been paying just a couple $100 a month on interest only, and then all of a sudden now they're going to be paying an extra $1,000 a month?
It could double or triple, and they haven't been paying a couple hundred. They've been paying like $800 or $900. Right. It could go to $2,400.
Wow.
It could dramatically affect people, and they're all starting to recast.
Well, 10 years ago that sounded like a great deal.
It was a great deal, and everybody assumed their house was going to go up in value, and they'd be able to refinance it for 30 years at the end of 10 years. A lot of the houses aren't worth what they paid for them 10 years ago. And so I predict a crisis, another significant crisis coming up because of those toxic, and it's because of toxic mortgages.
Are there a bunch of those?
There's thousands of.
Really? Even in New Mexico?
Hundreds of thousands of them.
Even here?
Yes, even in New Mexico, there's thousands of them. And it's unfortunate because the whole thing was based on continued appreciation of property, not a deceleration in value of property. So
Right. Yeah, because no one expected in 2005 that there would be a recession, that housing values would stagnate. Yeah.
There'd been growth every year, there'd been appreciation every year, and as you know, it just stopped and actually declined.
Right. Right. So how would somebody even figure out what to do with a payment like that?
They got to go back.
What's your way out of that kind of explosive payment?
They have to start by going back to the original lender and seeing if they won't renegotiate an extension of the existing terms. And that's what a lot of people will do. And I think the government's going to press lenders to do just that, potentially extend the interest-only payment for another 5 years to let property values rise again so that it can refinance.
Wow. So are there VA mortgage funds available still?
There's lots of VA mortgage funds available, and a lot of people don't realize they've still got VA loan benefits. Your benefit is $417,000. So if somebody borrowed $150,000, yes, if they've served, veterans, active military, reservists, and National Guard that have been activated for 181 days, they get full VA benefits. But the thing that people are confused about is they may have used their VA and they may have sold their house and it could have been assumed, okay? But they only used $150,000 of it.
Right.
Well, they've got another $300 and some thousand left.
Just available.
It's available and they don't know it, and they can go get another VA mortgage, which is 100% loan-to-value mortgage, 0 down.
That's amazing.
Okay? And the Veterans Administration is very, very willing to help you. So I suggest to anybody that are veterans or active military that are looking for homes, call us or call the Veterans Administration and they'll guide you. But if you've done anything in the past where you have not used up your $417,000, you have that remainder to use.
And you might as well do it.
You might as well do it because the terms on a VA loan are absolutely the best terms in the business.
That's great. Well, we've also got terms on everyone else's loans. We got a little slate here with all the rest of the mortgage rates, and these are still really, really low.
Well, actually, you can see the FHA rate has actually gone down a little bit
since last
week, right? It's 3.75% now on the note rate. Everything else is about the same. And you see a note rate, and then you see an APR. The annual percentage rate is the rate after you figure in all the closing costs, and it's for 1 year. So for the first year, that's what your rate would be.
That's pretty good.
By virtue of the closing costs. Still very, very affordable. Yes.
Great. Well, we're going to be back in a couple of seconds. We got our folks from the Golden Apple Foundation.
Yes.
We'll talk to them, but they're bankers. Maybe we can talk to them about construction loans.
Let's see what they say.
Back in a couple of seconds on the Morning Brew.